Very good morning, friends.
Morning.
I, Sandeep Sauri, on behalf of Central Kolkata CA Study Circle, EIRC, welcomes you all today on a very relevant topic on incentives and support to startups by government. Today, we have with us CA Dhananjay Walke to share with us his experience on this topic. Now requesting our study circle Deputy Convener CA Sanjay Ji Jain to give a special address to the session. Sanjay Ji, over to you, sir.
Thank you, Sandeep. I welcome all the members. Today's topic is very relevant. हम लोग आज की डेट में जितना भी काम करते हैं रेगुलर प्रैक्टिस के अंदर इनकम टैक्स, जीएसटी, कंप्लायंस इसी में इन्वॉल्व हैं, लेकिन स्टार्टअप, एमएसएमई ये अपने आप में एक बहुत बड़ा सेगमेंट है और स्पेशली हम लोग जिस किसी कंपनी के साथ में एसोसिएटेड एज ऑडिटर, आज ए टैक्स कंसल्टेंट या जीएसटी कंसल्टेंट, each and every company either falling, maximum company, not everyone, maximum company falling in the either MSME or startup. We are going to make a startup. उस कंपनी में क्या इंसेंटिव अवेलेबल है उसकी जानकारी हम लोग में बहुत कम आदमियों को है, या हम लोग इंसेंटिव के अंदर में कोई भी प्रैक्टिस नहीं कर रहे हैं। स्टेट गवर्नमेंट की क्या इंसेंटिव्स है किसी भी कंपनी के लिए, एज ए एडवाइजर हम लोग कभी अपने क्लाइंट को कम्युनिकेट नहीं कर पाते हैं, या सेंट्रल गवर्नमेंट की क्या सब्सिडी है sector specific या non sector specific. I request Dhananjay Walke to light on upon the incentive available to the startup and MSME. What is the role of the CA in giving advisory to a startup? What are the benefits we can drive as a consultant, giving advisory role to the startup companies? Any specific subsidy available to any specific sectors? What are the tax benefits are available to the startups company? That's all. Over to Sandeep.
Thank you, Sanjay ji, for the opening remarks. Now, Kishan ji, it's over to you for the introduction of our today's speaker. Please introduce the August gathering. Over to you, Kishan ji, please.
Thank you, Sandeep ji, our convener, for giving me the opportunity to introduce one of the most prominent name in the field of startup, CA Dhananjay Walke. CA Dhananjay Walke is a chartered accountant working in the field of fundraising, valuation, and government incentive since 2002. Work for growing and struggling companies for financial turnaround, help promoter in structuring of complex business deal for efficient transaction structures. He is a FCA, DISA registered valuer, IBB, AMCOM, and BMCC. He is a co-founder and associate partner, Private Limited, partner in DRP and Company LLP Chartered Accountants, fundraising for venture funds, power and mining sector, corporate planning, solution designing, implementation and competition, competitor intelligence, and Infosys Limited. He is engaged in fundraising of 1,000 plus crores for manufacturing industries from sugar, distillery, chemicals, beverages, paper, auto infra, and real estate sectors. He has consultant projects with more than 5,000 crores apex for government incentive in Maharashtra, including Fortune 500 MNCs. He has taken undertook valuation for manufacturing, financial services, and technologies companies for internal evaluations, merger and acquisitions, share swap, and shareholder agreements. He has engaged with 50 plus companies with top line above INR 25 plus crores for audit, assurance, diligence, government representation, transfer pricing, international taxation, IFRS, internal control over financial reporting aspects. He is having many skills, fundraising like business valuation, government incentive advisory, structural business transactions, due diligence, credit rating advisory, financial module analysis, building financial internal control, business networking. He is having a multi-talented personality. Please welcome CA Dhananjay Walke. Thank you. Over to Sandeep ji.
Thank you, Kishan ji. Now requesting Dhananjay ji to please address the session, sir, with your experience.
Thank you. Am I audible properly?
Yes, sir. Perfect.
Yes, sir. Yes.
Thank you, Kolkata Central CA Study Circle, for inviting me here. Thank you, Sanjay ji, for introducing me to this study circle and giving me an opportunity to share my views on startup on this platform. कृष्ण जी, आपने जो इंट्रोडक्शन दिया है, 2-4 नौकरी तो आज ही मिल जाएगी मेरे को. So thank you for the nice introduction. Because I have been working in the CA practice for last 22 years, I had got good opportunity to work on various opportunities on various spectrum of finance. So like you, आप सबने भी वही किया रहेगा. It is just that Krishan ji elaborated it in a manner कि वो थोड़ा ज़्यादा लग गया. But I am most of you are more experienced than me. Today, my job here is to explain the startup, basically the startup ka definition and the incentives that it has. To start with, startup and MSME is a bit different part, and to the extent possible, I would like to have this session to be an interactive one. So either you can share your views on chat box, or you can unmute yourself if possible with the permission of convener sir, and share your views. So initially I would like to know how many of you have already worked on startup, know about it, or helped your client on getting the incentives. Anybody?
No, sir.
No experience, sir, till today. I
Very
hope
absolutely
we
blank.
will definitely give advices to
No
our
voice
clients
in the
after
screen.
this session.
Okay.
But we'll have to explore the option.
Thank you. Any thought on the difference between MSME and startup in your own words?
MSME, sir, I think
Yeah.
it's a wide range, and startups may be some innovative or something that's add to the present business. That may be called as a startup. Every new business cannot be termed as a startup. A startup may be something different from the one concept, existing concept, I think.
Right. Anybody else?
Sir, I can say that Mr. Sandeep, what our convener has told, that is in the same line, is something different. That the concept should be unique.
Right.
There should be research and development behind that startup.
Okay. Okay.
Something new.
और सर creation of employment.
Creation of employment. Harsh ji ne bataya. Okay. What else?
Any value addition in the production chains or supply chain.
Okay. Correct. We already have many businesses in India. We have MSME, we have state level industrial policies wherein benefits are being passed on for last almost 25-30 years. So why the government is behind startup? Any thought on that? Why they are promoting startup? Why they are giving so many incentives?
I think for any country or any economy to grow, it's very important to bring the new things, new ideas in the economy, so that they in the future they may be developed further, and in new Pandora box or new business origin may be created.
Okay. Okay.
Atmanirbhar Bharat.
I think FDI. One thing is FDI also. I believe.
सर इस मोटो के पीछे सारा कारण है कि हमको वी शुड बी सेल्फ डिपेंडेंट. जो टेक्नोलॉजी आ रही है उसमें वी शुड बी डिपेंडेंट ऑन अदर्स, बट अभी हम लोगों को सेल्फ डिपेंडेंट होना पड़ेगा. दैट्स व्हाई द गवर्नमेंट इज गिविंग अ लॉट ऑफ इंसेंटिव टू द स्टार्टअप.
Yes, one of the important point. So can I, as we are now on the same platform, you have shared something on startup. Let's start with the presentation. So whether my screen is visible?
It's
Yes,
coming
sir.
up.
Yes, sir.
Yes.
It's okay now.
Okay, fine. So the most important, so let me talk about the need for the startup to start with. One, India is a country wherein the population which can be employed is growing at a rapid stage, and unemployment rate has been a greater problem for India for last many years. Many government came and gone, but unemployment rate has not come down below 5%. We are between 5 to 6% year on year, which is considering the employability. considering the employable population, I think 2 to 3 crore people are unemployed, and considering the dependent 2 to 3 dependent, there are probably 9 to 10 crore people of India who are deprived of basic standard of living just because the head of a family is unemployed. Second, we have seen the agricultural revolution, and then we have seen the industrial revolution. And since 1999, we have seen the service sector revolution in India. And it has grown so fast that today 60% of the GDP is directly, indirectly coming from the service sector. And the startup basically grows the further opportunities in growing the service sector and employability of a service sector. So that one of the important goal in promoting the startup. Third thing is we are facing now competition from the third world countries which are growing and coming up to the mark in providing services to the developed countries. So it is Taiwan or Brazil, Indonesia, Singapore. All these countries are now coming up with a competition in terms of providing services in finance sector or industrial sector, mainly the KPO, BPO that we talk about. And that has also created a need to boost the other services which may come from startups which are coming in India these days. Plus, there are some inherent limitations of Indian economy being a developing economy. And one of the greatest limitation of India still today is capital. As you know, in developed countries, the capital that a particular entity gets in form of equity or a debt generally comes from bank, which is in the range of 7 to 8%. But in India, that percentage is still above 50%. If I'm not wrong, it is around 56 to 58% till date. So if you take it as an example, every 50 to 60 rupees coming in business as a capital in form of debt or equity is from bank. And bank has to go by the rules. They cannot fund somebody who is new guy, who cannot provide security, who do not have past 2-3 years balance sheet. So as we all are chartered accountant, we have seen how the banks work. So it is very difficult through banking mechanism to promote the startup. And because of that, the culture of innovation, and because the culture of innovation is lacking, we see the problem of brain drain. That is, the talent in India generally fly out of India to create new products and develop new technologies. And ultimately, what we see directly, indirectly is you must have worked with many Indian companies who are either promoted by foreign companies or are in collaboration with the foreign companies, or those who use the technology from the foreign companies. So what happens is, despite of lesser or almost no utilization of the resources in their country. Now let's take an example that somebody is utilizing a auto related technology to manufacture auto parts in India, and the company from whom they have taken the technology is in Europe. So they are paying royalty on their sales, which is approximately 2 to 5%, wherein the human resources, the natural resources like land, water, the pollution, everything is happening in India. There is a cost to all these things. If tomorrow you want to redevelop the contaminated land and make it a fertile land, or you want to reduce the air pollution, or you want to redo the infrastructure that somebody must have worked on, it takes huge amount of money and time. And all this being utilized in India. However, the core money, that is royalty or management fees, directly goes to Europe without being utilizing any of the natural resources. Obviously, talent, innovation, and technology is there, but somehow we have not done it. Hence, we have to pay that much amount. So all these things add up to the need for startup in India. I hope I am not going into too basics, but we need to know these things. So if you feel that these things are not required, just let me know. Okay, status of startup in India. So startups are formally recognized as startup with the proper definition since 2016, when there was this notification which formally defined a startup in India. But well before that, since many years, there is a startup ecosystem which is growing at a 12 to 15% in India. If you see 2020, 29 numbers, there are approximately 1700 to 1800 startup from the technology platform which got recognized. So you can see that there are 2 to 3 startups each day coming in from various parts of the country. This pandemic has taught us a lot. There are approximately 70 crore people who have not got the access of internet, and because of this pandemic we all started utilizing e-commerce. We started digitizing our business. We started utilizing online delivery platforms to deliver product and services. The best example is today I am sitting in Pune. You all are sitting in Calcutta and we are doing a Zoom meeting. We wouldn't have thought about this in 2017-18. Simply because we would have thought that the physical meeting is much more better than having a virtual meeting. Ye jo abasi jagah hai, actually it is teaching us a lot. And the promise of potential new jobs from these startups. Now think about the jobs per se. Do not think like the job of white collar people working in an IT company is going by a car or something like that. Think about the jobs created by Dunzo, Swiggy, Netmade, Zomato. All these platforms are creating enormous job. It is creating the job indirectly also. If a restaurant is selling their stuff online through these platforms, they are indirectly employing many people within the restaurant. They need not close just because people are not coming there because of this pandemic. So all these things are again vocalizing the need for the startup in India. And the startup India has been pretty successful in last 5-6 years. So if you see till 2020, there are 55 startups who reached 1 billion, that is 7,500 crore valuation stage. Now those who are in business since generation would know that reaching 7,500 crore valuation, how many years it would take. But if you see in last 15 years, the average time to reach that valuation is now reduced from 15 years to only 2.4 years. And the recent unicorns that we have seen are mainly from financial technology segment like Paytm or Cred, or retail segment like Swiggy, Zomato, or there are software as a service wherein the people are providing softwares which are mainly cloud-based computing like Amazon Web Services, or the softwares which help you do business online. So all these things are very promising. See the growth of startup in India. In 2016, the recognized startup by Department of Promotion of Industries and Internal Trade was 504, and in 2020 it reached 14,740. So this is the kind of potential that we have in India, and this also in a way gives us the glimpse of the exposure that we would have as the chartered accountants to the startup ecosystem. If we continue to ignore it, probably we will be losing on the major chunk of new things that are coming in India in terms of business as well as in terms of knowledge. So this is startup. Now, just brief numbers to tell you the progress in last 5 years. There are more than 41,000 startups are recognized by DPIIT. They are from almost all the districts of India. I think India has got 760 or 800 districts in India, of which almost 590 plus districts already have startup which is recognized. They have employed more than 5 lakh people. Many companies have made investment into startup. The government itself has invested more than 4,500 crore. One of the major issues in corporate India these days is the gender balance, and startup seems to have balance from the start itself. 44% of the Indian recognized startups already have women directors. They are from 30 different states. They have received many government orders. They are eligible under income tax incentives, and all these incentives we will be covering henceforth from the next slide. But the most important part, let's look at the definition. Now, most of the people confuse startup with two things. One, MSME, and second, new company. Not every MSME is a startup. Also, not every new company is a startup, but a startup essentially is a new company and MSME, at least to start with. So let's look at the definition given by the government in their notification. So I have given the details of the notification. One, the entity structure. The entity has to be a private limited company or a registered partnership firm or a registered limited liability partnership. Again, this limited liability partnership and private limited company are covered under the company law, and the registered partnership under the Partnership Act. Now, let me tell you, all these conditions are not just because there has to be some condition. Try and understand, if somebody is coming with a startup, he invariably has some idea in place, and unless his business entity is not structured in a way that it can be scaled up, it can accept the different forms of capital like equity or preference shares or cumulative debentures or convertible debentures, convertible preference shares, all these various forms of fundraising will be available only to a corporate entity. Hence, government has in a way given you the guideline as to the kind of structure you should have in place so that आगे जाके आपको परेशानी ना हो. So these three types of entities only will be recognized as a startup. Second, you will have a startup tag, a recognized startup tag, only up to initial 10 years from the date of incorporation or registration under a partnership firm. Third condition is the turnover should not exceed 100 crore rupees. Now, understand the logic behind this condition. If your 100 crore rupee turnover, that means your product has already is getting widely acceptance from the public at large. That means that product is already developed to a maximum extent, which is now getting monetized. You have enough source of income to fund your further development or progress of a company. So probably you did not require any incentive from the government. The purpose of giving you an incentive is already achieved, and now government should move on to somebody new who is a startup than keeping on supporting you. So this is though it looks like a limitation, but this is very good in terms of recognizing new startup and not continuing with the existing company. As you see, the valuations of the unicorns are now getting achieved over a period of 3 years. So in 10 years is a big amount of time, and in any of these 10 years, if you reach 100 crore revenue or a turnover, you would be de-recognized as a startup. So this is the third condition. Now the most important condition is when we call an entity a startup, primarily it should work on innovation and development. So these two words are very important in improvement of existing product or processes or services or something new. And it has to be a scalable business model in terms of employment or generation of wealth. So unless all these three conditions are valid for a new company, it won't be recognized as a startup. Fortunately, Indian government has done a humongous job in coming up with the startup ecosystem through a web technology, wherein if you go on a startup India gov.in, you would find all the stuff related with the startup. In fact, you will find the minutes of the meeting wherein these recognitions are being awarded to the startup. So in all the minutes, in all the recognitions, you will find the reason of the same. So we will go through those details in detail, but let's understand the limitation part. First,
Dhananjay, one question is there. We have discussed that the private limited company partnership registered in LLP. So 1% company cannot be covered under the startup.
No.
Only three out of these three can others are not covered.
Yes.
1% company and all, even though they are in the corporatized.
Yes.
But
yes.
they are not. Thank you, sir.
Any other question?
not related to the slides.
Okay. So let's understand the limitation part. As I told you, once the 10-year are complete, irrespective of your turnover or status of business, you are de-recognized as a startup, because the startups are bound to fail. If you see the failure rate for the startups, it is more than and largely more than the success rate of the startup. So we should accept the failures of the same, and government have even come up with the incentives for the failures as well. We will consider it at later stage. But once you achieve 10-year or the turnover of 100 crore, you are de-recognized as a startup. Plus, if you are an already some entity and you are forming a new entity just to reconstruct your existing business. For example, you already do some activity in your existing business and you want to just have a franchisee model and you are coming up with a new company, or you want to expand it and for new branches or new setups you want to come up with a new company. All these things are not considered as a startup. If you read the minutes of the meeting, even the technology, existing technology coming in from outside companies, that is the foreign companies, and the new entity is getting formed to use that technology to do the business in India, is at times not recognized as a startup, because ultimately it is not the new development or innovation. So I would like to get as many questions as we can on this definition first, because unless and until we know what exactly the startup is, we won't be in a position to go ahead with the incentives part. So I would like to receive the questions, if any.
Sir, basically, all the if a entity we can call it as a startup, so any splitting or any division cannot be called it as another startup. No?
No,
As per you.
no, it is as per definition given in the gazette.
Yeah. This gadget, which gadgets we are talking about? When it was published in 2019. Not audible, sir.
Definition of startup changed 3 times. Once it initial definition came in 2016 notification, wherein the period was restricted to 5 years. The turnover condition was not there. Then the period got increased to 7 years. The turnover was, I think, 25 or 50 crore rupees. And the latest definition came in 2019 Gazette, which talked about all these conditions. So the government is also refining the definition for the startup, and the refinement is happening to have more inclusion into the startup recognition and not to exclude anybody. So that is a welcome step. I think Rajesh Kumarji has raised his hand. You can ask your question, sir.
Sir, is it necessary that the company should qualify, the company which is in manufacturing can qualify for startup?
Sorry, can you please repeat the question?
Means, sir, actually, if a company is doing a manufacturing activity, then only it can qualify for a startup, or only a trading company can also qualify for a startup?
No, trading company cannot qualify as a startup simply because it lacks the innovation and development. So trading, you are doing trading means there is an existing product or a service, mainly the product, which you are purchasing and selling.
Yeah.
You're not doing value addition. But if you are innovating the way the products are being delivered, let's take an example of Amazon. If you are starting a company which seamlessly automatize the process of delivery of a product from the supplier to an end consumer in an efficient manner with very less limitations, and you are helping the existing businesses to grow their customer platforms, probably that could be terms as a startup, though you are a trading company. But the trading activity in a way should be based on some innovation or development of some automation, robotic platform, which helps in the generation of employment or growth potential for the existing business. In that case, yes, it will be recognized as a startup.
Okay, sir. So my second question is that, sir, whether if a company is formed, say, after conversion of an LLP, which was set up just two years back, So does it qualify for a startup?
You have converted your existing business into an LLP.
Yeah, an LLP was converted into a company, but LLP
Okay.
was formed just 2 years back.
Okay, but what is the business of that
No,
LLP?
no business.
So business is in the distribution chain, sir. It is doing through
Oh.
Amazon, and actually the company has made an arrangement with the manufacturer who, and the company is selling its own product in through Amazon and other these channels.
So are they doing any innovation or some new product development?
Yeah, they are doing the innovation in the sense that they are actually the innovating the new products. Actually, they are setting up their own units to do this. The manufacturing activity also, but not doing them own self. But they are asking the other manufacturer to produce the things on their behalf, and then they are selling it.
How you are doing the business is immaterial here.
Okay.
What is the product? What is the ultimate service that you are providing to the end customer? Whether it is a with a very good improvement or with some scalable model. Now, let's take an example of tea vendor. So if a tea vendor is there, it is an existing product. He is providing service to these existing customer from his thela. So there is nothing new here. But consider that you are developing a vending machine which delivers a customized tea as per the individual's taste. Like if you want higher sugar, or you want ginger tea, or you want lemon tea, or something like that. That particular machine could be a new product which improves the delivery of tea. Probably that could be a startup. Or you come up with a franchisee model wherein you give the setup of tea making and delivering it to the end customer on a scalable model to various individuals or companies across India. And that franchisee model could also be a startup, provided it is well built within the meaning of improvement in delivery of the tea. So simply the product is not important. There has to be some element of innovation, development, and also the scalability in terms of wealth, that is revenue, or generation of an employment. Now let's take an example of Netmates. What they are doing, they are just delivering the medicines from the medical shop or the medical or the pharma manufacturer to the end customer. But the process of delivery of those medicines is on an automation platform. It is software. It automatically recognizes the need for that particular medicine for an end consumer, and it delivers through their delivery partners, which creates the scalability as well as the employment potential for the pharmacies as well as the delivery boys. So that could be a startup as per the definition. Okay, but you say that I have a medical shop and my counter boy delivers those medicine directly to the people staying around me. That is not a startup.
Okay. Then just one more question.
Ji.
If we are purchasing a plant or plant and machinery from outside India, and we have created something new from that plant and machinery, that is, we have created something, we have changed the module, and we are creating some new type of product. Will it be qualified for a startup?
There are additional conditions for the startup. One, obviously that is for the income tax benefit and not for the purpose of recognition as a startup. But yes, if you are developing something new from the machinery imported from outside India, that is fine. Let's take an example. You're developing a dairy product which is not present in India, and you are importing machinery from Germany or Australia. That is perfectly fine. But if you are a startup and you want to take income tax benefit, which we will discuss later, then there are certain conditions as to the use of existing machineries or import of machineries. Let's look at all those things at that particular slide. Any other question?
Sir, we can go ahead, sir.
Okay, fine.
Concept of a startup is now clear to all.
Fine.
Now it will be very helpful to understand.
So let's now go through the registration or the recognition process. The process is pretty simple. You have to go online on an Indian Startup India website. you create an account over there. The account creation process is also pretty simple. You file an application for recognitions to the DPIIT. There is a interministerial board set up who evaluates your applications and grant the recognition. The process is as simple as it is. There are certain things that you need to cover in your application. First, you should have an incorporated entity, the registration certificate, the details related to incorporation, like the incorporation date or permanent account number or the incorporation number, the director details, then something related to the idea or a product or as innovative services that you wish to start in that particular startup, which could be termed as a proof of concept or a brief about the kind of problems that you wish to solve or the kind of solution that you are providing, the uniqueness of your product or service, or how scalable it is, how it could generate revenue. If you already have some recognition like the patent or some certification from incubation center, or you have already started with the work and you have employed number of people, or there is a potential for higher employment, all these things you can include in your platform application. It could be a simple write-up, it could be a link to your website, it could be a link to a video, or you can also attach your presentation. All these things are accepted to understand the exact status of the kind of work that you wish to do under that particular company. If the DPIIT Interministerial Board finds it fitting within these three conditions of innovation development, or improvement in existing solution, or scalability in terms of employment or revenue, they will award you the benefit of the startup through recognizing you as a startup. And all such startups are recognized in a meeting. On all these meetings, the minutes of the meetings are transparently uploaded on that particular website. So I would request the people who wish to apply for a startup to at least go through those existing minutes of meeting for at least last 4 or 5 meetings. There you will understand the reason for recognition of a startup, because the minutes give all the details as to the reason as to accept the application or even to reject the application. So one of the application that I read recently was related to automatic delivery of generic medicine through doctor prescription. That means they have developed a platform wherein doctor do not write the brand for a medicine. They give a generic medicine and that particular platform delivers the generic medicine. This reduces the cost of the medicine for the ultimate customer, and also create an automatic delivery platform. So that was recognized as a startup. Most of the applications get generally rejected on the basis of reconstruction or the split up of existing business from the existing process to get it recognized as a startup. So that is one thing. One thing that government has categorically told on their website and their gazette, that the repetition of an idea cannot be the reason for rejection, because if the idea is getting repeated, in a way it means that there is a additional potential or demand for that particular kind of service or a product, and it also creates the competitiveness in that particular sector or a product or service area, which in turn create a good opportunity or probability of success of a startup in that particular area. So please keep in mind that if you receive the rejection letter, understand the reason behind it. If you receive a rejection and you wish to reapply with modification of your concept or some addition or deletion in that particular concept, you can do so after the 3 months from the date of application or the rejection. So it is not end of the road. You can again apply for a startup and get yourself recognized by changing the concept or modifying it to fit the recognition criteria. I hope I am clear here. So let me tell you about the the formation of a board, it is the mix of three different departments of Indian government. One is Department of Promotion of Industries and Internal Trade, then the representative from biotechnology space, and then the science and technology, because almost 70 to 80% of the startups which are recognized are from that particular technology. Hence, the presence of the representatives from those departments helps in understanding the application and also recognizing the same. I already told about the rejection reasons and the process of reapplication. DPIIT can also ask you for the additional information and make an inquiries. At times there could be visits also. And all these things happens through an email communication or a mobile communication. So whenever you are filling up the details of contact, please make sure that the contact details are provided of a person who knows everything about the application and the business itself. Because unlike income tax, wherein most of the times the CA details are given, it should not happen in startup application. It should be given for a person who is the promoter of that particular startup. Any question till here? Am I audible? Yes, Harshji. Harsh raised hand.
Sir, I have read somewhere, maybe I am wrong. Is there any penalty if the application has been rejected?
No, there is no penalty. There is no application fee as well.
और सर इसमें हम लोग 3 महीना अगर मेरा एप्लीकेशन रिजेक्ट हो जाता है तो वापस कितना दिन तक अप्लाई कर सकते हैं, मतलब 3 महीना जो एप्लीकेशन वही?
हाँ, 3 महीने बाद कर सकते हैं, 3 महीने तक नहीं कर सकते.
थैंक यू सर.
मतलब 3 महीने के बाद आप कभी भी कर सकते हैं, इट्स बट 3 महीने के पहले नहीं कर सकते. 3 महीने के बाद अपने 3 साल 10 साल कितने भी वो उसमें कोई लिमिटेशन नहीं.
It is a new application as it is any which ways. I hope I am clear here.
Yes sir.
Okay, so now let's move on to the benefits that a startup get. So most of the benefits are categorized into 3 parts. One, the simplification of a process or handholding in developing a startup, and the government incentives that you get. Then the funding support that you receive from the government, and the various platforms that government gives you to demonstrate or recognize or create an awareness about your startup. So we will talk about all these things. So first is simplification and handholding. So we will be talking about all these things like self-certification regime for compliance with the government laws, the Startup India Hub, intellectual property rights support, the relaxation in public procurement norms, the exit route for a failure in case of failure for a startup, the tax incentives and other regulatory amendments that other laws have done for the benefit of startups. So we will cover this. We will also briefly cover the funding support through the seed scheme, the credit guarantee scheme, and funds of funds that the government has created over a period of last 2-3 years. So we will cover that. We will talk briefly about this. Now I have not covered it in detail. There is nothing to cover actually. So what the Startup India department as such from a government does is they have many programs or the exhibitions or the seminars or the industry expos wherein they give opportunity to recognize startup to showcase their product and service so as to make them aware and network them with the possible investors or customers. It is done through online as well as offline platform. They also help in talent acquisition and employment through Setu program. They also do the mentoring of these startups. They recognize startup by helping them reach out to various incubation centers and innovation centers created by universities or the technical or research departments of India. They also help you in setting up the research park or technology parks wherein these recognized startups can go set up their business and take the help of existing infrastructure or services, wherein it would be an added advantage for the startup to shorten the delivery or the innovation period for their existing product and service. So this is a very wide program. It continuously happens. All the events are online, posted on the website. The applications of the startup to demonstrate themselves in these programs are also online. So you apply, there are always the timelines, you apply within those timelines. The government then gives you the grant to come and demonstrate your product. There are many awards. So if you let's take an example, like say sports related innovation ka koi exhibition hai, and if you participate there and if you are recognized as one of the promising startup over there, you get at times the cash grant from the government or the sponsors, wherein you receive the money. So all these things are covered under this particular industry academia partnership and incubation facilities support given by the government. So barring this, we will be covering mainly the incentive part and briefly the funding part. So first of all, really sorry about the bulky PowerPoint presentation. Being chartered accountant, we have this practice of covering each and everything, but I have tried to reduce the text to the maximum extent possible. So let's start with the incentive part for the startups. First, the self-certification of certain compliances from the government side. So as everybody knows, if somebody wants to start a business, there are n number of laws and registrations, trade registrations that you have to take. And simple industrial entrepreneur memorandum, IEM, takes at times weeks and months. So understanding the importance of time for the startup, because an idea is not a remunerative idea till it reaches a market. And if you take a lot of time in having a company in place, getting the required trade registrations for the same, and if you waste a lot of time in all those things, probably you will be late in delivering your product or an idea or a service to your end customers, and probably you will lose out on the competition part because somebody would already be there in delivering those things. Understanding the need of this time, the government, what they have done is they have identified 36 different industrial sectors wherein they feel that the pollution norms or existing environmental laws are really not that applicable. Let's assume what a software company can do in terms of water and air pollution. Hardly anything. There could be tech or e-waste, but that is also probably better monitored than a sugar factory or a pharma or a distillery unit somewhere in the rural part of India. So accordingly, they have identified 36 such industrial sectors which does the lesser pollution. Now everybody knows under pollution control norm, you get this three recognition. Either you are a white industry, that means with very low pollution, or an orange certificate, which is moderate pollution, and red, which is huge pollution, wherein the government gives you the effluent treatment processes and you have to follow those processes. You have to establish those processes, and unless you establish those processes, you cannot start the business. So there will be two different permission: consent to establish with the guideline as to the effluent treatments, and then consent to operate once you have all those effluent treatments in process. So this benefit is there for those 36 different sectors. And if you fall within those sectors, you can simply give in your own application self-certified that I am from this one of the 36 sectors. I hereby comply or will comply with the environmental laws, and you will get the benefit of compliance for a period of 3 years without any physical verification. So it is as simple as that. Then there are certain incentives under these 6 laws, which are mainly related to labor and contract labor, which are most of the times doesn't apply to the startup. So like the building and construction workers, interstate migrant, or contract labor, all these laws generally do not apply to startups working in software or technologies fund, but gratuity, PF, and state insurance do apply. And Indian government, the central government, has asked the state government to formulate a policy to provide this self-certification benefit to the existing startups. So accordingly, the benefit vary from 3 years to 5 years, depending upon state policy, wherein they help startups to self-certify the compliance with respect of these 6 laws. So it is simple. You make an application, you attach a self declaration that we are complying with these laws, and you are done. You need not do any other compliances with respect to these 6 laws, which are state prerogative for the period which state generally give you. So this is related to the compliance. Second is the public procurement. Now, most of you, those who have clients who works for government would know that if you want to work with the government, 2 things are very important. One, your experience from that particular sector in terms of longevity of that particular company or an entity, plus the minimum turnover criteria, so as to become a preferred bidder or L1 वगैरह. So understanding the need for making startups head their way by earning revenues, government would like to promote them, and most of these tenders which are hosted on central portal for public procurement are related to automation of the delivery of existing government portals. It could be modernization of website, or automation of pumping stations, or automation of power grids. So all these kind of tenders are generally given to startups as a preference to recognize them and make them monetize their idea or a product, so as to reach the maturity stage as early as they can. Wherein they are exempted from deposit of EMD, the earnest money deposit. They are also exempted from the security deposits or whatever it is, because they lack capital, and all these things would take away capital away from the development part. And that's how they can participate in the tendering process without any prior experience or minimum turnover criteria. So this is one of the welcome and the most promising benefit for the startup. The third is IPR support. Now, those who are from valuation would know that any idea, unless it is securitized, it cannot be valued to its full extent, because unless your idea or a product is patentized or trademarked, you cannot claim the ownership of the same. And understanding the need for that, generally patents take huge amount of time. The trademark also, if not applied properly, takes a lot of time, and at times they get rejected for the technical reasons. So what government has done is they have created the team of experts who help the startups, obviously the recognized startups, to get the legal support, wherein these team of experts help these startups to fill up or to make an application for the patents or the trademarks. They also coordinate with those departments to fast track processing of those application, and providing of this patent and trademark if they fit into those criteria. All this effort in supporting and facilitating the IPR recognition is done by the government at free of cost. Obviously, you have to bear certain fees for application for patents and trademarks, but recently they have also given the rebate in applications. Like for patent, it is 80% rebate, so the cost of 8,000 rupees is reduced to 1,600, and for trademarks 50% rebate is there. So these are indicative numbers. The actual cost may differ, but these rebates are there. So when you are applying, you should know that these kind of rebate are there, and all these application are the manual ones. There are no standard application, and all these things can be done in support with the government. So IPR, though looks in terms of amount a very small benefit, unless once you are done with respect to securitizing your idea through an IPR ownership, the doors for an investment gets open immediately. So for promoter, this is a huge benefit. Now the most beloved part for the CS, the tax incentive. So any startup who is recognized by the government gets the benefit of 100% exemption from the profits of that particular business of which is recognized. So a startup could be working on 4 or 5 different ideas. probably only one of the idea could get recognized as a startup by the DPIIT. So only the income arising out of that particular product or service which is recognized as a startup will get 100% profit exemption over a period of 3 years, 3 consecutive years in 10 years block. That means if you cannot do like I took a benefit in 3rd year, then 7th year and 9th year. Once you start benefit, you have to take it consecutively for 3 years. Obviously, there are certain conditions that the existing business will not qualify for this because of splitting or reconstruction. However, according to section 33B, which is actually invalid since I think 2005-6, but for this particular section, it is still there. Like if a particular business is shut due to any natural calamity, like tsunami or flood or drought or any other reason which is beyond the control of the management, and if you are reconstructing that business or reviving that particular business and creating an employment opportunities, you will still get that benefit, but then accordingly you have to mention it in your application. A word of caution here: if the exemption benefit is evaluated in a very detailed manner when it comes to tax incentive. So CBDT verifies it in a very minute way, and if they find that this particular business do not fall under the definition of a startup or is a reconstruction of the existing business by split up or something else or through some foreign collaboration or something like that, and if they find it out, then your recognition as a startup for other incentives also get nullified. So if you are derecognized here, you are derecognized for all other benefits. The question Krishanji has asked, the machinery part, if you are utilizing domestic machinery, then it is not allowed to use the second-hand machinery. It has to be 100% fresh new machineries on which the depreciation is not claimed. And if you are importing machineries from outside India, the composition of that machinery should not be more than 20% of the gross block. And again, that machinery should not be used anywhere in India. It should not have received any depreciation benefits, so on and so forth. So these are 2 major conditions. And eligible startups, additional benefits in terms of this particular tax incentive is it has to be incorporated between 16 till April 2022. I think the period is increased by 1 year. The existing notification says it is still 21, but I think it is increased to 22. The turnover should not exceed 100 crore in previous year, for which you are expecting a tax exemption, and you hold a eligible certificate for a recognition from DPIIT. Somebody was asking question, Yash ji.
So I have a question that let's say a startup has already been formed 2 years ago and they have not availed this particular benefit under the tax incentive registration with CBDT. Is there any time limit within which they need to register with the CBDT for this particular benefit?
There is no time limit. See, the first process is within a period of 10 years from the date of incorporation, whenever you feel like you are ready with the product or service which fits the recognition criteria as per the definition that we talked about, you make an application to you make an online application to DPIIT through startup.india.gov.in. You get the startup recognition first. Once that recognition is availed, you then apply to CBDT in Form 2. The form is very simple. Again, available online. And once you file that application, it goes to CBDT. They evaluate, they take a recommendation from this interministerial board. Unless the recommendation is there, you won't get that benefit. And generally, recommendation is extended to the recognized startup. And on receipt of Form 2, generally within a period of 1 or 2 months, they will give you the recognition or the exemption certificate with all terms, conditions. And if you are derecognized over there for whatever reasons, and interministerial board find it at a later stage, they may also withdraw your startup recognition as a startup as well. So that I already told you. So for you, the simple process is you are not completed 10 years. It is only 2 years. Go get yourself recognized as a startup and then apply to CBDT in Form 2. to get
Right.
this
So,
benefit.
so actually, we have already applied for the registration under with DIPT,
Hmm.
but we have not applied for this CPDT. So, is there no this thing that after we register as a startup within this much time we have to register as with DPT?
No. Once you are recognized as a startup, then you apply to CPDT.
Okay, there is no time limit after that to
There is
apply.
no.
All right,
There is
thank
no
you, sir.
time limit. Whenever you want to take a benefit.
Right. Thank you. Thank you.
Dhananjay sir, it means the foreign machinery can be only 20% of the
Yes.
total net block.
Yes.
Only 20%.
G.
Okay.
Of the gross block.
Yes.
तो सर यदि 20% से ज्यादा होता है तो we will not get the benefit on the extended part.
No.
स्टार्टअप के लिए हम लोग एलिजिबल नहीं है.
इंसेंटिव के लिए, स्टार्टअप के लिए आप एलिजिबल हो सकते हो. स्टार्टअप में ये कंडीशन नहीं है, इंसेंटिव के लिए ये कंडीशन है, प्रॉफिट एग्जम्पशन के.
ओके. तो बेसिकली तो प्रॉफिट इंसेंटिव का ही फायदा होता है ना.
Not really, because startup में if you see the existing startup which are making the headlines, most of their income is coming through valuations, not from the profit into the balance sheet. तो उसके लिए अलग benefit है ही ना.
Dhananjay, suppose one startup has been started and continuously for the next 5 years they have incurred loss of about 100 crores. And in the 6th year they have started earning, and 6, 7, 8 they have started 10 crore each they have earned, so 30 crore they have earned. So whether it will be netted off, and net loss is even 70 crore. So in the income tax, even no tax is there in the because carried forward losses will be available for him.
You will be exempt from MAT then.
MAT is also exempted for 22% is there. So
if you take that benefit, then
no MAT will be there.
So sir, in this what we are discussing, that that profit from the 6th year, that will be treated as a tax incentive in this case?
No. You decide that in a period of 10 years, which 3 consecutive years you wish to take this benefit. So if you wait till 7th year and you want to take this benefit for 8th, 9th and 10th year, you can still do it when your carried forward losses are absorbed.
Okay. Fine, sir.
Dhananjay sir, can you elaborate the benefit of startup other than the valuation benefit? Actually, the valuation benefit is for only big players. For a smaller one, can you elaborate something different?
See, what happens is, I think let me complete the next slide, then probably you would understand it in a detailed manner. So,
yes.
So what happens, as we all know, if an Indian entity gets the stake in any other existing entity in India, we have to do the fair value valuation of that particular entity's equity or share or whatever it is. And if you acquire that share for more than the fair value, then that premium is charged in the hands of the company as the other income. That's what section 56 says under the capital gains. And for specifically to the startup, if you are a recognized startup and you still take the investment above face value, that particular profit will not get taxed. And that is a huge benefit, because there are various stages for any startup. So those who reach $1 billion mark are probably into series C or series D round of funding, or maybe at IPO or something like that. But let's take a small example that you are a startup, you invested say only 2-3 lakh rupees on a product or an idea, and you are ready with a prototype, and some businessman wishes to give you say 2 crore rupees, and for 2 crore rupees you are willing to dilute only 20%. Now, as per section 56, whatever is the valuation could be your net worth technically. So it could be hardly 5 lakh rupees, and you are diluting say 20% for 2 crore rupees. So there could be huge tax impact on that particular receipt. So under this particular benefit, you can avoid that tax if you are a recognized startup under the DPI 18. So that is a huge benefit, because then you would save 20 to 30% of that amount, and you can in turn utilize that amount for your further development. You're getting my point?
Yes, sir.
Ji. Again, this particular benefit is also under Form 2. Apply to CBDT if you are a recognized startup. You give the details of the transactions that you are willing to enter into, and if you are receiving money exceeding the fair market value of the share, you will get the benefit of a tax exemption. Any questions here?
It's clear, sir.
Okay. Now, these provisions and rules anyways do not apply to a non-resident or a venture capital company, because they're anyways exempt from a company or an entity criteria in earlier section as well. So specified company excludes the non-resident or a entity which is a public entity, because then you will be acquiring the share over the counter or on a stock exchange, which does not fall under section 56. Or if you are a registered venture capital or venture capital fund under SEBI, and you are investing an amount which is more than the fair value of the shares, any which ways you are exempt from the tax under that particular section. So that one benefit is there. Obviously, the benefit for this benefit, the limit is up to 25 crores of a valuation, the total premium that you receive on a share valuation. So if you exceed that particular amount, you need to pay tax. So 25 crore is still a fair amount, because you are probably saving not less than 5 crore rupees on the allotment of share for a valuation purpose to an investor or a fund, which is not a venture capital fund. It could be an angel investor or something like that. So this benefit is huge. So so these are another exclusions from the section 56. So if you are a listed entity, forget about this particular section. And if you are receiving money from VC or recognized SEBI approved fund, any which ways this particular section does not apply. I do not want to go in detail, because we are all chartered accountants, so we would easily understand all these things. So the purpose of today's program is just to make you aware that the kind of benefits that you have. So when you come across any startup who comes to you for an advice, you should know that these sections are applicable to them, and there are benefits which are applicable under this section. You can simply go through them and would understand. These are written in simple English language. So shall I move ahead?
Yes, sir. Yes.
Okay. There are other very normal benefits that are available, which are modified into the Finance Act or income tax, considering the startup itself. So one benefit of exemption from long-term capital gain, if you invest that fund into a central government recognized fund, which are for startups. So this provision came in May 2016. Then if you are selling a residential property or a land, and you are utilizing that capital gain for an investment into a startup, which is a recognized startup, or purchase of a specified asset which will be utilized by a startup, wherein your stake is not less than 25%, you can still get an exemption from capital gain under section 54GB. This was inserted in February 2016. MAT credit is available to everybody, but the credit can be carried forward for 15 years instead of 10 years, which is inserted in 2017 Finance Act. Now this under section 79, if you are an eligible startup and you have a carry forward of losses, we know that in the existing law, if the shareholding changes more than 51%, you can carry forward only the unabsorbed depreciation, and you cannot carry forward losses. We all know that. But what happens in terms of startups? Promoters remain same, but investors entry and exit. So most of the times you would see the headlines that SoftBank entered and bought the stake from KKR, or KKR entered and bought the stake from somebody else. So because of all these series of funding to a startup, at times it may so happen that the shareholding changes are more than 51%, and they might lose the carry forward of loss under the Income Tax Act. And in order to save them from this particular deprivation from the income tax benefit, what additional thing that they have added is, if the 100% of original shareholder are carrying on with the business with 100% voting rights ke shares, then they can still continue to get this benefit. This is huge. Most of the chartered accountants do not know it. So if you are a recognized startup, please make sure when you are filing a tax audit report and doing an assessment, you know this. Pretty simple. Just make sure those who started the company, the promoters, are continuing with the number of shares that they already had, or whatever they must have received through sweat equity, they continue to carry on with that particular number of shares whenever you wish to set off your carry forward losses, despite of changes in shareholding pattern. I hope I am clear here.
Sir, you mean that no shareholding is pattern is same shareholder should carry the business?
Now let's take an example. There
Sir,
are five.
Can I say? I think additional capital issued can be changed, but the older one, the last one.
No, not like that. Not like
initially allotment किए थे sir, जो promoter के पास.
Not like that. Say, let's take an example that 3 guys started with the company with 3 lakh rupees. And over a period of time, they received, say, 30 crore rupees money through an investor, wherein they diluted, say, 60% stake. And the balance 40% stake is with these 3 guys, wherein this 40% stake is allotted to them through initial allotment, plus preferential allotment, or sweat equity allotment, or ESOP. All these things should carry. There is a concept of promoting somebody to a founding member in a startup ecosystem. So if you are an employee which are there since inception, and you are added to a founder partner level, their shareholding should also continue whenever you wish to take this set off. Are you getting my point? So it also applies to the additional shares that you get after the initial allotment, either it through form of ESOP or sweat equity. समझा कृष्ण जी?
नहीं, इसमें सर शेयर होल्डिंग चेंज हो सकती है ना, शेयर कैपिटल विल चेंज, तो हाउ द 100% वोटिंग पावर विल बी विद द ओरिजिनल शेयर होल्डर्स?
See, they should continue 100%. See, the language is continuity of 100% original shareholder carrying voting power. It is not the shares carrying voting power. So shares could change, na, but shareholder should remain the same. So ऐसा हो सकता है कि 3 में से try and understand.
उनको नए शेयर मिल रहे हैं, लेकिन उनका जो पुराना है वो कंटिन्यू है
और उसमें भी कैसा होता है
वो भी चेंज नहीं हुआ.
हाँ, सपोज 3 लोगों ने स्टार्ट किया, जिसमें से एक आदमी ने बीच में छोड़ दिया बट वो शेयर होल्डर करके कंटिन्यू है, और जो 2 आदमी है उसमें से एक जो है वो टेक्निकली बहुत स्ट्रांग है और स्वेट में उसको ज्यादा से ज्यादा शेयर्स आ रहे हैं, तो शेयर होल्डिंग चेंज हो जाए, बट ये तीनों लोगों ने कंटिन्यू होना जरूरी है.
बट सर तीनों का मिला के शेयर होल्डिंग 51% से ऊपर होना चाहिए.
नहीं, नॉट रिक्वायर्ड.
ये लिखा है ना, कंटिन्यूटी ऑफ 51% शेयर होल्डिंग.
और ये तो पुराना अपना कंडीशन है ना इनकम टैक्स का, 51% शेयर होल्डिंग का. ये तो कंटिन्यू है ही. ऊपर से अगर आप वो कंटिन्यू नहीं करते, बट ओरिजिनल शेयर होल्डर कंटिन्यू इन टर्म्स ऑफ एलिजिबल स्टार्टअप, यू स्टिल गेट द बेनिफिट ऑफ सेट ऑफ लॉसेस.
ओके.
माय क्वेश्चन इज जस्ट लेट मी नो, 3 प्रमोटर्स ने स्टार्ट किया, तो उसमें से एक आदमी ने एग्जिट कर लिया, लेकिन अपना शेयर दूसरे किसी ग्रुप को बेच दिया, सेम विद इन द 3 पर्संस आपस में इंटरचेंज हो गया. इन दैट केस बेनिफिट मिलेगा कि नहीं मिलेगा?
बट तीनों लोग कंटिन्यू कर रहे हैं क्या? इंटरचेंज हो जाने दो.
एबीसी 3 बंदे हैं, उन्होंने स्टार्ट किया, बी ने अपना शेयर ए और सी को बेच दिया. प्रमोटर ग्रुप रिमेन द सेम इन टर्म्स ऑफ क्वांटिटी, इन टर्म्स ऑफ ग्रुप?
नहीं, ओरिजिनल शेयर होल्डर्स आर नॉट कंटिन्यूइंग, यू विल नॉट गेट द बेनिफिट.
ओके,
थैंक यू सर.
जी.
अगर स्टार्टअप रजिस्ट्रेशन लेने के पहले अगर चेंज हो गया पार्टनर, तब?
So whenever you are doing a startup registration, anyways you are filing with them the original incorporation documents like MOA, AOA. तब के नंबर्स तो है ही ना आपके पास प्रमोटर्स के, तो वो तो कंटिन्यू होने चाहिए.
नहीं सर, इसमें स्टार्टिंग में मैंने एक कंपनी फॉर्म किया, उसमें कुछ और शेयर होल्डर्स थे, बट एट दैट टाइम नो इनोवेशन ऑन नथिंग वाज हैपेंड. After the incorporation, some shareholders has been changed, and after that innovation came to the picture, and after that we gone for the registration.
So make sure that the core team who is working on the innovation and idea should have the shareholding, and all others should get mezzanine instrument like convertible debentures or preference shares or something like that, so as to make sure that this benefit continues to accrue over a period of time. Otherwise होता क्या है, आप इन्वेस्टर को भी शेयर होल्डर करके लेते हो day 1 और वो छोड़ के चला जाता है, तो ओरिजिनल शेयर होल्डर्स में इट इज assumption that whoever joins at the incorporation of the company are jointly developing and innovating a product. So इसमें से कोई भी छोड़ के चला जाता है तो नहीं, तो वो हर कोई एक्सक्यूज बना लेगा ना, नहीं वो तो इन्वेस्टर था सिर्फ, he was not the partner in innovation and development. तो somewhere there has to be a red line wherein you define कि ये है तो है, otherwise नहीं है.
Right.
Okay. In terms of TDS, you get the deferment for 5 years or till the time you leave the company. If you have employee stock option scheme wherein the TDS needs to be deducted, but you can deduct it at later stage. This also helps because generally gross up hota hai startup ke case mein, employee stock option ke case mein no employees pays the TDS from their own pocket, so company needs to contribute. In order to save that cash flow, this particular benefit has been given. So let's move on to the next benefit. So registration part with CBDT, I already told you that they have to apply in form 2. What they need to write in that application is point number 3 here. 1, their memorandum of association or LLP did. One point I forgot, partnership firms are not recognized for these incentives. So if you are LLP or a private limited company, then only you will receive these benefits, because the fair value concept, etc., or all are applicable to all these 2 entities, not to the partnership firm. So because of that, they are excluded. Second, the board resolution in terms of the kind of benefits you are getting, or you are applying to CBDT for exemption or something like that. Then your annual accounts drawn up for last 3 years, if it is applicable. If you are there only for 2 years, then 2 years, only 1 year, then 1 year. If you are new, no statement needs to be attached. Then copy of income tax returns, again, if you are applicable to you. Then upload their company's information memorandum or a pitch deck. Then 2-minute video in terms of the product and service or the idea that they are developing. All these things are first evaluated by interministerial board on the same basis which we talked about in the definition. Then they will recommend it to the CBDT, and CBDT then will reconsider all these things along with the recommendation, and then will grant you the certificate of exemption under section 80 IIC or the exemption under the carry forward, section 56 for capital gain. So this is the simple process, nothing new. All these things you already do for recognition of startup with DPIIT. You have to follow the same thing with CBDT. The form is also simple, available online. Any questions here?
No, sir.
Okay. Now, as I told you, most of the startups invariably fail to either convert their idea into a prototype, or a prototype into a remunerative product or service, or a remunerative product or service to a scalable model. So whenever your company stops doing business and you are a recognized startup, government then will give you a resolution professional from their own kitty. You need not bear that cost. They will voluntarily liquidate your business. They will file a resolution application with the NCLT, and they will get you the exit under liquidation route on a fast track basis, wherein a normal period of 180 days is not there. It is only 90 days, and additional period of 90 days in normal cases also gets reduced to 45 days. So over here also there are certain sanity checks are there, like you should not have created a humongous debt. There should not be any criminal charges or suits filed against you, vagera, vagera. So all these things will be seen. It should not be merely used as an instrument to deny the debt repayment. So all these things are in a way checked by the resolution professional appointed by the government. So this is one of the good benefit, because most of the startup fail and there is no point in continuing these startups, because most of the times we have seen in past that instead of liquidation there are n number of things to be done. Sabhi creditors se NOC leke aao, banker se ye leke aao, wo leke aao. So most of the times the promoters continue to run that company because एक audit report करने में और एक simple सा nil tax return file करने में शायद कम पैसा लगता है rather than liquidating a company. So in order to avoid those complications, government has extended this benefit. Then there are certain regulatory amendments which are made primarily keeping startups in mind. So under MCA, there is an exemption from procedural compliance for raising deposits from shareholders for a startup company. So over here, you can raise that deposit over a period of 10 years, plus the number of people from whom you can raise that is also increased from 49 to 200. Again, it is in line with the deemed public issue rules under 2013 Company Act. They have also amended rules for dilution of equity through ESOP, and that too for directors and promoters holding more than 10% from 5 years to 10 years. So ESOP scheme is also modified. Then they have also escalated limit. There is a limit for differential voting rights shares that can be issued. So it has increased from 26% to 74%. So the benefit that we talked about, Sandeep ji, in the last slide, that if you are admitting an investor who is not an original shareholder, you can issue the instrument to him without voting right or a differential voting right. Then distribution of profit exemption is also there for differential voting right share. We all know that the CSR rule is getting stricter now. So anybody who is doing contribution towards a government fund or an incubation center or university fund, which is targeted towards helping startups, are recognized as a contribution towards CSR. There is a period of now 10 years instead of 5 years for issuance of again the mezzanine instrument like convertible note or something like that. These changes are done because earlier the startups were recognized for a period of 5 years. The definition got changed in 2019 for 10 years. Hence, the MC also changed the period of issuance of convertible debenture or ESOP or differential voting right shares from 5 years to 10 years. So all these things are in line with the definition of startup, which is done by MCA just to promote the startup and ease making the compliance easy for them. Any questions here? These are all company secretarial stuff, but still it is good to know about it.
No questions, sir.
Okay. So RBI has done certain amendments. So ECB, everybody knows that there is automatic route, there is a permission route. So every time you are taking ECB, you have to follow certain norms in terms of average maturity, the rate of interest, the purpose for which it is coming. So earlier it was allowed only for capital expenditure, then it got allowed for working capital as well. So all these headaches are now no more there for startup who is receiving money through an ECB route up to $3 million. So despite the sector or the purpose, you get automatic approval for ECB up to $3 million, which is approximately 22 crore rupees these days. Then any foreign venture capital investor can contribute up to 100% capital in India startup, irrespective of sector, because there are some sectorial limitations under automatic route. So SEBI has given that permission, which is a welcome step. Then India startup having an overseas subsidiary can have a foreign bank account to receive foreign currency outside India and to make an expenditure also in foreign currency outside India. Everybody knows that there are rules in terms of foreign inward remittance certificate, the period within which you should realize your export benefits, that is realization. So all these things are done easily for startups because export oriented startup needs to make also many foreign payments. at times it becomes difficult for them to realize money in India. So in order to expedite the process of realizing revenue, all these benefits are given in that particular module. So go through the FEMA details for receipt of foreign currency for sale or revenue realization. You'll get all these benefits for the startup. The Softex form, the software export form is moved online. This is very much awaited benefit for the software exported, though it is not targeted towards startups, but most of the startups are benefited because of moving the Softex form. Anybody who has worked in Serve from India scheme or something like that? Earlier, there was a scheme wherein if you are exporting services outside India, 10%, maximum up to 10% of your revenue could be utilized as a credit towards payment of duties and certain expenditure in terms of capex, etc. That scheme is also related to Softex form. So all these things are now streamlined and helping the startup and existing SFI beneficiaries. SEBI changed certain rules, mainly related to the angel investors. So angel investors are basically the investors who help the startup at very initial stage, wherein it is probably only at the idea stage to come up with a prototype or to materialize their idea. So earlier the lock-in period was only 1 year, sorry, 3 year, which is now reduced to 1 year because the startups are growing at a stage which is very fast. Then angel funds are now allowed to invest in overseas capital, venture capital undertakings also, because most of these overseas funds are indirectly then funding the Indian startups. Again, the angel investors now can be more than 49. So you know that deemed public issue definition got changed in 2013. So earlier it was 49 people, now it is up to 200 in a financial year. So same thing got way into the SEBI's regulation, and it is now increased to 200. Plus the minimum investment criteria is reduced from 50 to 25 lakh to recognize them as an angel fund. And the operating guidelines for alternative investment funds in International Financial Services Center is also given, which help the angel investors to find a way into fintech companies through an alternative investment fund schemes. So though these things are too technical, the amount of time that a particular consultant or a startup promoter used to spend in getting all these things as a permission from SEBI is pretty easy now. So the angel investors are now in a better position to invest into a startup. So exit route is already streamlined in terms of reduction in the lock-in period and all stuff. So this is in a way help startups to get the investment at their early stage of product or service. Okay, now I am moving on to the funding stage. So any question related to incentives till now?
I think, sir, it's all clear during the course of deliberation.
Okay, so I think all these things are already known to you, but still for the purpose of clarification, I would like to reiterate these things. So pre-seed funding is the funding that a startup receives when you only have an idea and you want to do some research on that, you want to develop some prototype and not a final product, you want to test your idea. So for all that activity, which involves the research development, refinement of an idea, writing a code or something like that, all these things are called pre-seed investments, which you generally get from your own family, friends, or your own pocket. A government gives collateral-free debt for that, so we will cover it in the later stage. Then the seed capital is basically to launch your commercial product or a service into the market. So it involves commercialization of your idea, investment into the production or development processes, developing a delivery model either online or offline. So when the product an idea gets converted into a product and service, and if it can be pitched, most of the angel investors or VC funds generally come in to make sure that your product or service reaches the end customer. So that is called a seed funding. Once a product is accepted into the market and it gets some traction, that means some revenue or some number of customers start using those product or service, the VC fund and the bank loans come into picture to start getting new markets or streamlining your product delivery or services, or refining it, branding it, providing various incentives to adopt that product or service by various customers. So that is called Series A funding. Then Series B, C, D, E, all these stages are basically the expansion of your business by increasing revenue through the means of acquisition of additional customers, or some related product or new market. So let's assume that you are a startup and through Series A funding, you developed your customer base in Maharashtra, and now you want to grow it to say Gujarat and MP. So with Series B, you can add additional 2 states wherein you develop a delivery infrastructure over there, create a model wherein you have your distributors and everybody. Then probably C, D, E could be additional market. So probably it could be only one product, and you can have a like, let's take an example, like you have Apple phone. So you have launched basic Apple 12. Now you want to launch Apple 12 Pro. So for the refined product or new product, you get Series B, Series C funding. Obviously, it comes with a higher amount. So most of the times, private equity firms, VC funds, and financial institutions get involved. And ultimately, somewhere all these investors should make money. So to make money, they have to exit at a valuation. So that exit route could be an IPO, which is obvious. And second, acquisition of a startup by an established entity, like WhatsApp got acquired by Facebook, or LinkedIn got acquired by Microsoft. So these are the examples of acquisition of a startup by an established entity. So any questions on stages of funding?
No questions, sir.
Either I'm going too fast, it is not
No,
at all
sir.
clear, or it is
It's
clear
very
to a maximum.
Because sir, in Calcutta, I think we are very less in working with this startup concept. It's now we are pushing it to our members. So
Okay.
question will come up in the future, I think.
Okay.
Funding.
So in terms of funding, there are 3 schemes. One is Startup India Seed Scheme, then Seed Fund Scheme, then the Credit Guarantee, and the third is Fund of Fund. So the Startup India Seed Scheme is basically you get it up maximum up to 20 lakh rupees for validation of a concept or ideation of your product or service, or development of a prototype. And another 50 lakh rupees or up to 50 lakh rupees you get for commercializing your product, scaling it up, or market entry. The amount looks very small, but being very frank, these small amounts only helps the startup to just convert it. See, understand, these amounts will not make you $1 billion or $1 million startup. These amounts will help you come up or achieve a stage wherein you will attract investment or investors, so that you continue to progress. So as the name suggests, it is only the seed fund to sprout and come out of a ground to showcase your product and service to the customer or the investors. So generally you get this money from that scheme. Obviously the application is again online in form of debt or a convertible debt or debt link instrument. It is not at all sector specific. You get it for any type of industry or product. It is generally executed through incubation center, but it is not necessary that you go through the incubation center or a university fund itself. You can directly apply online, then you will get the network or mentor related details. Then you can go there, you demonstrate your product, get recommendations, and accordingly you will get the fund from that particular institution, which is linked again to the government. The process is completely online, and the stages of meeting or mentoring through an incubator or a mentor and a startup, everything is tracked online. So once you go on a Startup India website, you are a recognized startup. all these links for applications to various schemes, whether it is tax or fund related, are activated and you see that benefit. So normal registration, you won't see those links, but once you are recognized, you get login ID and password, which you already created. All these things are then linked to all these schemes. So this is one scheme. Second is credit guarantee, wherein government has come up with 2,000 crore fund, which is deployed through a guarantee, wherein the guarantee is given by RBI to regulated banks, NBFCs, and SEBI approved institutions, mainly the alternative investment funds. So the purpose here is to make sure that the startups get good benefit. That is generally the guarantee is received for money up to 10 crore, which is good sum in terms of the startup ecosystem is concerned, wherein you do not have collateral, you do not have any security to provide. So over there, if your product is developed to a certain extent, it has seen the commercial aspect of same, you have started getting some revenues, then through this scheme, the banks or the NBFCs or the SEBI approved funds will lend you the money up to 10 crore, wherein the government will give the guarantee to those funds, which is up to 10 crore for a repayment of the debt. Obviously, it is not like a you can take the money and then forget about it. There is a monitoring mechanism. There is the structuring mechanism wherein the repayment is ensured either through valuation or through revenue, depending upon the kind of startups you are. So all these things are there. It is, please keep in mind that whenever you are applying to a bank or an NBFC, make sure that if you are a startup recognized, make an application for collateral in terms of credit guarantee from the government. So that's the benefit under credit guarantee scheme.
Any interest benefit?
No. No, there is no specific interest benefit is provided, simply because the scalability of a startup is altogether different. So unlike normal business, you being a chartered accountant, I can use these terms. You have this TOL, TNW, total outside liabilities upon total net worth. So any established company will get debts approved only if his TOL, TNW is maximum up to 4 or 5, depending upon the bank policy. But in case of a startup, you cannot simply apply these terms. There is a huge amount of risk still involved. So there could be a startup into a technology wherein if you get 5 crore rupees from a bank as a loan and you develop a software, that particular software can make a revenue of 500 crore as well. So it is risky, it is scalable, it has got potential. So the interest related benefits are not given, yes. But if you are investing as an equity, then also this particular benefit of guarantee is available. So don't think in terms of 2 or 3% interest reduction. Think in terms of getting equity rather than debt. So you will be exempt from 100% interest if you apply to AIFs.
Sir, suppose like a startup got recognized. After the recognition, they have to put their money themselves, and after a particular certain level of achievement, only then the bank will be able to give the money.
Yeah, so once you are recognized, and at the time of recognition, you must have given a concept or an idea or some basic things that you have developed. So if you want to further develop it, make it a market related product, you get that seed funding of 20 or 50 lakh rupees. Once you achieve that stage and you want to come up with a production facility or scalability or expand your geographical reach, you can get loans from these institutions up to 10 crore rupees under a guarantee scheme.
So seed funding also received from the banks?
No, the seed funding is received from the government under SIDBI route.
Okay. For the startups at the just initial stage of
Yes.
they fund,
Yes.
without any guarantee,
Yeah, all these things are without guarantee or without collateral.
Just with the recognition of the startup, that can be applied and taken from this.
Yes. You have to apply. You have to demonstrate the bona fide as well. It's not simply that once you are recognized, you will by default get this 20, 50 lakh rupees or 10 crore rupees. Nothing like that. You have to still demonstrate the need, repayment capability, the model, everything. And if they find your business viable, then they will fund. But in order to make their mind to fund collateral for 10 crore rupees is also a good task done by the government. Because if you go to a bank today and ask that I am a startup, I want 5 crore rupees to develop a software and I don't have any security, nobody will fund you. But with this scheme, probably banks will fund you because they are receiving a guarantee from government. Obviously, there are certain operational modalities in terms of getting this credit guarantee from the government itself. Like what are the different parameters that you evaluated at the time of funding a startup, how you monitored, where the cash flow came in, how the cash flows are utilized, whether any recovery mechanism is possible, if possible, how much percentage would go to government and how much bank can retain. All these operational modalities are there, which are very detailed and institution specific policy making stuff. So I don't want to go into that. Everything clear in terms of credit guarantee?
Yes, sir. Whether sir, this credit guarantee also, the personal guarantee also required at the time of guarantee?
No. So generally banks will take personal guarantee because unless you are bound personally, you will not perform. This is the mindset of an Indian ecosystem. But personal guarantee doesn't mean that you have to upfront give a mortgage on your residential property or something like that.
Okay.
So next and the last thing in funding support is fund of funds. Now, what is fund of funds is basically government through SIDBI gives funds to venture capitals or AIF who will in turn invest into the startup. This investment could be in any form. It could be debt, it could be equity, it could be mezzanine finance, anything. The only condition is that whatever is the amount that you are taking from the government, you have to add at least twice the amount from your side. So any say venture capital say wants to invest 200 crore rupees can get 100 crore rupees from the government and invest 300 crore instead of 200 crore into a startup. This helps in two ways. One, it reduces the exposure of a venture capital into a venture capital fund by 1/3 simply. And second, they can then fund at least 1/3 more. Like assuming that they are willing to fund 30 startups, they can fund additional 10 startups just because they are getting that much amount of money from a government, which they already plan to invest. You're getting my point. So that way, it is a good benefit. Actually, the numbers are very optimistic. Recent number says that if you receive 1 rupee, generally the venture capital invest at least 7 to 8 rupees in the startup. So it is not only 2, it is the multiple of 7 to 8, which goes into the startup. And India is really a exponentially growing startup economy, wherein good amount of funds are being received through foreign entities or through government or through HNIs, which are getting invested into startups. So fund of fund, though the amount looks very small, it creates very good opportunity in terms of developing more number of startups, because as the number will grow, the success rate will go, because the probability remaining same, say 1%. If there are 100 startups, 1 will succeed. But if there are 1,000 startups, and there are 10 startups who will succeed. So that way it is really helpful because it creates an opportunity for employment as well as wealth for a nation. So this is in terms of funding support. How much time do I have? I have another 10 minutes.
Yes, sir. Please.
So let me talk about this Startup India portal, because I have been talking about this a lot. So you can visit startupindia.gov.in. What you will find there is basically all these applications and the benefits from the same. Plus, you will find a list of investors, mentors, incubators. Accelerators means the technology team who can help you in accelerating the development stage or going to market stage. And there are also government bodies to handhold you. There will be a number of programs which you talked about. So you will get notifications of all these programs. You can apply there, you can go there. In those expos or exhibitions or programs, you can meet government officials or investors or your customers. Most importantly, there are some free tools and resources which are contributed by established entities like LinkedIn or Zoho or Microsoft, wherein they give you the free use for their softwares or the programs or free access to the database, which in turn helps you to develop your product more fast, adapt the technology at pretty early stage without spending huge amount of money. Like you get free access to Amazon Web Services if you are a recognized startup. So that way you save on your cloud computing costs. So all these things are there. There are some free downloads which are verified templates in terms of appointment letters or your agreements, which you generally enter into with the investors or the contractors or your vendors or employees. So all these things are available at free of cost. So please visit this website so that you would know it in greater detail. Most of us represent investors as a chartered accountant. So that's why I inserted this slide, so that we understand that it is not only the investment is the only role for an investor. At times you have to manage the stakeholders. So as a chartered accountant, you can help them in structuring the shareholder agreement. Like, though I am an investor, what are my responsibilities? What are promoters' responsibilities? How the exit route will happen? What are the tag-along, drag-along rights? How the exit will happen in terms of multiples? How the valuation could be pre-decided? So all these things you can do with your domain knowledge in terms of finance. You can help startups or the investors to have these agreements in place. Once the investor is there, most of the times it may so happen that the equity will invariably followed by debt. So you can help those startup raising debt from other financial institutions or banks. You can also help in acquisition of a talent. So once the money flows into the company, most of the startups are handled by technical people. So they are very less well versed with the financial terms and expertise. So you can also help the startup in recruiting. Yes, Umeshji.
Sorry.
So you can also help startups in recruiting the financial expert, so that the cash flows are properly monitored, the investors get the result of their investment properly, and startup also get handholding in terms of management of their financial affairs. Marketing of most of the chartered accountants are also very well versed with certain industries, so they can also help in marketing strategies or development strategies. See, it doesn't mean that you will help in identifying the distributors or something like that. What happens is, most of the times discount schemes are formed, और आप सुनते हैं ना, एक के ऊपर एक फ्री, या इतने केसेस के ऊपर इतने केसेस फ्री, या इतने प्रोडक्ट्स के ऊपर इतने प्रोडक्ट्स फ्री. So most of the times when you are developing these strategies, there are financial impacts. So if you know the budget for marketing, converting that marketing budget into a marketing or discount strategy is a CA's job. No technical person would able to find this out. So if you could just help those startups in developing that, they could usually save on the wrong money spent on marketing strategies. Again, M&A, merger acquisitions, most of the startups achieve growth through an inorganic route. Like I think Swiggy acquired the Panda, or the Zomato acquired certain local players in the same field. So all these acquisitions, we as a chartered accountant help in valuation or deal structuring or doing an agreement, financial agreement. The last but not the least part is overall financial restructuring. See, we being an auditors as well as into practice for last many years, we know the best industry practices, how the existing entrepreneurs work. So this knowledge can be utilized for the startup in making sure that their costs are low, they have sufficient systems in place, they follow good corporate governance, they have certain people in place so that the organization structure itself will take care of certain things, how to scale efficiently in terms of the available capital, how to utilize the capital efficiently. All these things you can mentor the startups through investors, and that's why you also can make a good money for you, because if the investor is investing, say let's assume that you are investor, your client is investing good amount of money in particular startup, you can go as an advisor from an investor to that particular startup board and oversee all these activities, add your perspective to the existing working and the organizational structure of the startup. I hope I am clear. Any questions here?
Yeah.
Hello.
Mr. Yes.
Yes, yes.
Generally ask, is there any in the MSME, in the startup website, or is there any platform where chartered accountants can register and panel themselves so that so that the startups are able to connect with us? I mean, is there any government website or something as such where we
Yes.
can connect with startups?
Yes, you can go on to the startupindia.gov.in. Over there, you can register yourself as a mentor.
Right, sir.
And once you are registered, you will start receiving requests from startups to work as a mentor with them.
Mentor would entail CA related responsibilities, or I mean, that range, the scope is wider.
I will cover it in the next slide.
Right.
Very nice question, by the way.
Thank you. Thank you.
Any other question? Okay. So I think it is this last slide. I hope I am on time. So I have last 5 minutes, I guess. So
Yes,
let
sir.
me cover the CA's role. Though I am very young, for most of you are very experienced in terms of CA expertise. But what I see from the startup ecosystem on working with many businesses is our role of compliance will slowly fade away with cloud chain technology, with artificial intelligence. I would not be surprised if after 5 years, GST compliance is all automatic and no human intervention is required. All the physical movement of inventory or products are easily tracked by the government through some technology. Every money is tracked through. Are you aware of lender entity identification number, legal entity identification number, LEI, which is mandatory
Yes,
for
Yes.
businesses with loan more than, I think, 5
5
crore
crore.
rupees. So these numbers will in a way track the cash flows across banks. So after some time, probably your bank will give you the balance sheet, like this is your balance sheet, just certify it. Or if the balance sheet is prepared by the bank itself, no auditor is required. All these things are going to happen in future. So as a chartered accountant, our role is to start providing services for which actually we took the pain. We never took the pain to prepare an Excel sheet to file a GST form, 3B, 3C, whatever we talk about it. I am very sorry. I do not provide GST services, so I am not in that particular stream. So I cannot talk in detail about it. But most of our compliance job is simple arithmetic or Excel work. Though there is a field of consultation in terms of determining the pricing, determining the optimal tax structure, reducing the credit, or working with the inverted duty structure. But most of the CAs and most of the times are involved in the compliance work, which will fade away. And then we are compulsorily need to move to a more critical and more structured job of financial advisory. And to my knowledge, unless we acquire an industry expertise, we will not be in a position to provide this financial advisory. Let's take a simple example, like unless you know about real estate, unless you know about the movement of cement prices in last 1 year, unless you are aware about the movement of steel prices in last 1 year, unless you are aware about the new development rules under your state, the concepts called FSI, paid premium, or fungible FSI, you will not be in a position to calculate the development potential of the land. If you don't know about slum rehabilitation schemes, you will not be able to literally advise your client. So industry expertise, acquiring an industry expertise is a need of an hour. So if you are already in CA practice and you already cater to certain types of business, I would advise that you start getting a deep knowledge about that particular industry, so that sooner or later you will be recognized as an techno-commercial expert from that particular field, and that will be a deadly combination. So once you acquire those skills, then you can be a mentor on any company coming in that particular sector in terms of sharing your experience. So I worked for one chocolate manufacturing company. So I was involved in land acquisition stage, and there I understood how the processes works, and accordingly what should be the layout of a land. So as a chartered accountant, what should be the layout of a land at the time of acquisition is not really expected by the client, but you can still add value by asking these questions, identifying the need of a particular layout, and then doing handholding in land acquisition. So all these things really helps. These are very small things, but really helps the customer. And then you can get paid for this expertise. You can also get paid in form of sweat equity or equity, which in turn will fetch you money in valuation stages or through exit route. So I would request all the chartered accountants to start working in that route by identifying the industry or a sector wherein you have some technical knowledge. Start consciously working on that knowledge, and then you can move on to a mentor role. Simply for preparing a GST returns or audited balance sheets or doing a costing work, nobody will make you a mentor. A mentor has to be a techno-commercial guy, which adds some value to the business. I hope I am clear on this. This is the last slide. And thank you very much for the patient listening. We were talking about for almost last 2 hours. So any questions till now, I am happy the time permits.
Sanjeev ji wants to ask some question. Yeah, please, Anmol.
Dhananjay ji, it was a nice presentation.
Thank you.
As you talk something about LUI, can you throw some light on as registration of LEIs?
See, government has,
although it is not a topic of today, but it's just related, so that I wanted to just know about it.
see, government, that means the RBI has come up with a lender entity identification number, which needs to be applied by a entity which has received more than 5 crore as a debt from any bank or a financial institution. This particular number is to be applied from a particular entity. I forgot the name. Let me find out through my email account, but it is CCIL India.co.in. I don't know the full form, please excuse me for that. Yeah. But it is a government entity wherein you apply. The application process is simple, the KYC stuff. So once you apply over there, they'll give you one number, and that number you need to supply or give to your bank. Now, what the banks are doing is this lender entity, legal entity identification number is attached to every transaction that happens through your bank, and it gets attached to your transaction, so that over a period of time, government will build up a artificial intelligence wherein it will track the source and the end use of the money in very proper manner. Now, let's take an example that you have taken a term loan. You have taken 10 crore term loan. You give it to your machinery supplier, and then he in turns give that money to one of your subsidiaries or a associated company. The misutilization of fund or siphoning of funds can easily be tracked through this LEI. It is, I hope we are aware a bit about cloud chain technologies. I am not talking about the currency, virtual currency, but a cloud chain technology wherein the data is properly tracked through the source, and data is verified through a third party vendor. So using this artificial intelligence, life of a borrower will become miserably dangerous, and those who only wants fund for proper legal purposes will be in a position to get the funds in future, and will enjoy the success through leveraged positions in their businesses. To tell you something, I faced a forensic audit for an account which was proposed to be a willful defaulter account. Sandeep ji, let me know when I should stop.
Please go on, sir.
In case of that forensic audit, though it is a forensic audit, it was being undertaken by a government investigative agency. They started with the assumptions that you made at the time of giving CMAs. I could manage to speak with one of the guys, and he told me that if you have given CMAs without any proper backup of assumption linked with your capacities and your abilities to do the businesses, we will consider it as an organized crime to deceive a bank from initial stage. So willful default never starts with the default. It starts with taking loan, because it has to be a preparatory model wherein you decided to defraud the bank from very initial stage. So most of the time, these CMAs are prepared by the chartered accountants. And what we do, 100 crore revenue today, 5% growth year on year. Last year COGS 75%, 0.5% inflation rate. So the expenses are developed, and we simply prepare P&L balance sheet without any linkages with the existing production processes, bill of material, changes in raw material pricing in last 4, 5, 6 years, changes in finished good pricing in last 4, 5, 6 years, storage capacities, install capacities, utilization of utilities like ETP, power, steam, falana, dimka. So all these things will get tracked in future. This IBC is exposing people like anything, so please be aware of all these things.
So do I get some benefit while registering as an LEI? And secondly, I have to renew it every year.
Yes, you have to renew it every year. The amounts are pretty small, and you have to mandatorily take it and give it to your banker.
No, it is a mandatory situation, but do I get some benefit? I can.
The bankers get benefit.
Okay. Thank you.
Probably after a certain period of time, RBI will stop the working capital or disbursement transactions if you are not LEI registered.
Is it linked globally?
I'm not aware of that, frankly, but it is linked domestically for sure.
Okay, thank you.
The global transactions are linked through SWIFT codes. Any other question?
I think, sir, all are answered during the television, and it's nicely covered.
Can we get recording of this entire presentation today?
Yeah, Sanjeev ji, definitely we will give the recordings.
Okay,
and the presentation, if Sanjay ji,
yes,
will share with us, we will.
I will share.
Presentation also.
It's a very nice and informative.
Yes, sir,
Recording are available on YouTube.
Sanjeev ji, our Central Calcutta recording, you will get each and every our seminars recording in YouTube. All are in YouTube. You can see at whatever time available to you.
Okay.
Yes, it is recorded. It is live right now, I guess.
Yeah,
so
it
once
is
it
live.
Is
It is also recorded.
Sir, you can just type in the YouTube. You can type Central Kolkata CA Study Center. So you can take a record of all our recordings, and you can enjoy the benefits, sir.
Thank you.
That is the beauty of this online recordings, online training of these sessions.
Virtual seminars have enabled us to connect to authorities like Dhananjay and everyone.
Right, sir.
Thank you.
Thanks a lot. Thanks a lot to the delegates. Thanks a lot, Speaker Dhananjay ji, for this enlightened session. This is a special session, not usual, other than this income tax, GST and all. startups, we should know how we can help our customers, clients. Now requesting Ramataji is with us. So requesting Ramataji to please offer a 30 vote of thanks to our speaker Dhananjay Jiwalke. Over to you, Ramataji. You are muted, sir.
Thank you, Dhananjay, for enlightening us in last 2 hours and 15 minutes. This topic is not usual for the chartered accountants in Kolkata. Certainly, we will be benefited. Our client will also be benefited through our knowledge, and we will start doing practice or working on this startup business also. We will certainly give the benefit to our clients for setting up the new startup business. Thank you, Dhananjay, and hope after learning something in next few months, we will again approach you for the next session. Thank you, Dhananjay, and delegates who have joined this seminar. Thank you all. Over to Sandeep ji. Now, this is our e-memento. You please keep in your e-library.
Thank you, sir.
Because during this pandemic time, we cannot give you the physical memento. This is our token of love and remembrance towards this session with you. Thank you.
I think it is a great opportunity to be back with Kolkata people. Sanjay ji knows I was working in Kolkata for 7-8 months. So it is really a good feeling to be back with Kolkata, guys. I really love Kolkata like anything.
Yeah, thanks a lot, Dhananjay sir. It's really, we like this Sunday morning. Yeah, Mr. Harsh, you want to talk something? You want to tell something?
Yes, sir. We get too much knowledge today about the startup. We were looking for this only, basically.
Thank you, Harji.
Yeah.
This is session for us also a startup session. We will have advance course next time.
Sure, sir.
Thank you, sir. Thank you a lot.
Thank you
a lot. Thank you all the delegates for the being with us, and because of you only we organize this type of sessions always together. So thanks a lot. Now we can end this session. Thanks a lot, everyone. Thanks a lot, sir.
Thank you, convener.
Thank you, Dhananjay.
Thank you.